Greeting to all, this is Ali from the Zivox team. First of all, have a wonderful new year surrounded by all your loved ones. Today is Tuesday. This is exactly the first video recording and the first commentary recording in 2024. We are here to start our new type of market analysis with our great team at Zivox. This year will be a different year for us, because we are representing a new way of financial content and offering high convention trade opportunity. All of them are generated by our analysis team and using the Zivox terminal tools. Our weekly outlook analysis video and our trading opportunity share on your Zivox terminal at the video commentary page exactly right here. Every week you can access to one video from fundamental outlook and a week and several commentary video special for high opportunity trade idea by our Zivox team. Now let's get started with the summary of central banks and the sentiment of the whole market. First, let's talk about the US dollar in a review. In 2023, the US dollar forced a volatility in the sake of uncertain Federal Reserve pivot. All the time, the strong economy data from the labor market challenged hopes for a pivot. Despite a summer-autumn rebound driven by increased treasury yield, the greenback is set to end the year with nearly a 3% loss against the basket of currencies. Traders are now more confident in an impending pivot influenced by heat from Fed Chief Powell and expectation of aggressive rate cut this year. Chance of interest rate cut in 2024 are getting close to 160 basis points, even though the US economy is not in a recession. Federal Reserve officials expect around 3 rate cuts. The minutes from December meetings set to be released on Wednesday might be a way for the FOMC member to stick to their view of only making a small adjustment to policy over the next couple of years. So let's take a look at the economic calendar. The job and employment data in USD. A job report is coming on Wednesday and Friday, and the policymakers are focusing on employment. Powell is cautioning about easing policy to avoid rising unemployment. The job market looks steady with a slowing growth but minimal layoff, allowing wages to rise. In December, nonfarm payrolls are expected to increase by 158,000. The jobless rate to tick up to 3.8% and average airing to stay stable at 0.3% monthly rate and a 3.9% year-on-year figure. So what is expected is mixed forecast. The job data is not bad or is not good. So we have to wait for printed data to figure out what could be the next step of Fed decision about any rate cuts signed in their next meetings. So any surprise in NFP reports on Friday could be a good driver for the US dollars, but given investors' strong bet that the Fed will start cutting interest rates soon. The slight difference in the headline NFP report from expectation is unlikely to trigger a strong reaction from the US dollars. By looking on calendar events, another important event on this week calendar is on Friday. We have employment and unemployment change data and PMI for CAD. So I prefer to check this data directly on a USD CAD page. Let me check. On the fundamental section, in line with a speculation for a rate cut by the Federal Reserve, bets on rate cuts by the banks of Canada have also increased recently. As you see, we are working in key points. Rate will remain at 5% interest rate, BOC ready to raise if needed. Because this past B will be a bit difficult for the BOC. It is possible that the economic data force BOC to start cutting interest rate, but because of despite the easing policy in 2023, we have seen weakness in the Canadian labor markets, and interest rate cut can accelerate the heating of the labor market and rising inflation. That will make it difficult for Canada and BOC. However, employment has been increased in recent months. It has not been able to keep pace with the growth in the number of job seekers. The economy is expected to have added just 3,200 jobs in December. However, wage growth remained high at 5%. So on Friday, investor will be watching wage growth along the PMI index, expected for forecast printing 55 for 54.7 previous printed. So what expected for CAD is some gain in this week, but we have to wait and hands up for clear data print. After USD and CAD, now let's look at the Eurozone data and what dealer expected from that. In the last year, the euro has had many ups and downs from recession, economic problem, and war and risk of Ukraine, and the energy problem, all of which put pressure on the European economy. However, due to being more hawkish than the ECB, its currency was able to maintain its strength. But in the new year, to revive its weak economy, it has to adopt easing policy. The previous statements of the European Central Bank showed that they think more cautiously about lowering the interest rate. And what is most important to them is the stability of inflation and keep it around the 2%. On Friday this week, we have CPI data for the broad, which will give trader a good indication. If this data does not show a certain reduction, the euro currency will likely be supported, because the chance of the interest rate reduction for the European Central Bank will be decreased. Actually, we expected the bullish momentum for euro against the USD during these days. And take a look at the fundamental. As you can see, the fundamental bias based on the fundamental data is bullish, but it is weak bullish. Forecast is showing rising too. We are looking for a good opportunity to trade on USD, Euro, CAD. Also, we are checking the AUD and NZD currency as our watch list. So be in touch with us and waiting for next update during these days for our trade opportunity and our trade idea. Trade idea published exactly like the commentary videos in this page. We will update you for a new videos and new trade idea on Telegram channels. Thank you for watching this. Have a good day. We talk soon.